So, Endeavour Mining, as you take time to read the disclaimer, I just want to point out that is truck simulator in Burkina Faso. I'm always impressed where people with no driving experience several months later are driving big trucks around our operations. So 15 minutes today, split the presentation to 4 sections. First, a quick snapshot of who we are. Second, I mean, we talked about on the panel, but mining is a lot like real estate. It's all about where you are. We'll talk about then our strategy. And finally, if I've convinced you and I told a good story up until now, I'll try to convince you of why we're a good investment. So Endeavour, we are the largest gold producer in West Africa, top 10 globally, producing about 1.4 million ounces. But most importantly, we're one of the lowest cost producers amongst the senior peer group. So what is the golden opportunity we see in West Africa, pun intended? Put simply, West Africa is where most of the discoveries in the last decade have been made. It's one of the places on this planet where you can get quick permitting. Construction, you'll see it in the next few slides, but in terms of capex intensity, it's one of the lowest globally. And there's a strong track record across the space of people or companies delivering projects on time, on budget, and safely. And finally, it's become the largest gold producing region globally. So on this next page, you see in yellow, so that's the historic production. Ghana has been historically a large producing country and it's grown over time. But most of the growth in West Africa has come within the countries in which we're present in. Mali, Ivory Coast, Ghana, and Senegal. So when you take a look at where production comes from today, you see that West Africa ranks first, before China, Russia, Australia, Canada. It's for this reason that mining companies such as ourselves are present in West Africa, but not just us. When you take a look at all the senior gold producers, 6 out of 10 of them have production in West Africa. And from an investment standpoint, it's difficult to be an investor, want to be invested in the gold space, and ignore West Africa. Because then if you also ignore China and Russia, that's the bulk of the global production that you're ignoring. In terms of exploration spend, the industry ranks 4th globally, so over $500 million being spent there. Endeavour's budget is 80 million per year, so a big chunk of that is Endeavour. So this, for me, foreshadows where future production will come from. Not only is it a large producing region today, but will continue to get bigger because the industry is spending the dollars in West Africa. And the reason we are spending money in West Africa is because there's gold to be found. It ranks first globally over the last decade with nearly 70 million ounces discovered. So when we take a look at the project pipeline, so we've analyzed projects that have over 1 million ounces of resources, we see that the bulk of the projects are in Africa. And most of them, more than half of them, are in fact in West Africa. We've also analyzed how companies have built projects over time and where they've been on budget, under budget, and on schedule. And what we see is that in West Africa, you can build quite quickly, some of the lowest globally. And a good reason for this is the topography. So you're not trying to build mines in the Arctic where it's very complicated. Here it's typically dry, has good infrastructure, and you can go quick. And the stats prove themselves. I mean, it's not just Endeavour. Yes, we've built ET and Houndé on time or under budget, but across the space, you see with those pie charts, most of the mines in West Africa have been built on time, on schedule, on budget, and safely. Looking at capex intensity, and we've discussed this during the panel, West Africa is amongst the lowest places, so less expensive to build projects, roughly $100 per ounce. So we like the geology in West Africa, but we also like the geopolitical aspects. The countries in blue here operate as an economic union. So they have the same currency, which is pegged to the euro, and fiscal and monetary policies that are very well aligned. This has been very stable for the region. So you've had coups over time, but no country goes rogue for too long because they're part of this economic zone. Royalties are based on sliding scale, based on gold price. So when the gold price goes up, countries benefit more. So this has been stable versus other parts of the world. In terms of, we talked about ESG in the last panel. I mean, this is a great example. Endeavour, we returned $2 billion last year. That was our economic contributions, both in local procurement, taxes, minority dividends, etc. So our growth story. Our strategy, put simply, is create a high quality portfolio and be a trusted partner. Because if you have these two ingredients, you're able to reward shareholders over the long term. In terms of portfolio criterias, what we've been working on for the last 6 years is to focus on cost. We've seen gold price go from 1,000 to 2,000, back down and back up. And if you want to survive and take advantage of these cycles, you need to be low cost producer. So we want to be below $950 per ounce. Have at least 10 years of visibility. Production size, I mean, we haven't been driven by production size. That's why we've sold 4 assets in the last 6 years to focus on high quality production. But it's good to have size to be able to split your G&A and be present and be a big force in the area. So 1.5 million ounces is a sweet spot for us. Again, we want to be diversified across multiple countries and multiple assets and tie all of this in with strong capital allocation discipline. So to deliver this, we've been working on 4 pillars in the last decade. Be good operators, develop projects, unlock exploration value, and actively manage our portfolio. As I said, we bought some assets and we've sold some assets over the last 5-6 years. So given the theme of this conference is growth, I'll focus on the 2 pillars, project development and exploration. As we talked about in the panel, I mean, to be able to fund your pipeline, your project pipeline, you need exploration success. And in the last 6 years, Endeavour has discovered over 15 million ounces. So this has not only extended our mine life, it's been able to generate projects for us. So when I take a look at our portfolio, we have 6 producing mines that are generating healthy return on capital employed, healthy free cash flow that allows us to reinvest in the business and pay shareholder returns. We have 6 development projects at various stages, and because of time, in the next 3 pages, I'll describe Sabodala-Massawa, where we're doing a brownfields expansion, give a case study of Lafigué, which is a project we discovered in-house and are currently building, and touch upon our new discovery in Ivory Coast, Tanda-Iguela. So Massawa, this is probably one of the best opportunities we see in terms of value creation because you're leveraging an existing operation by building an expansion. So all the infrastructure is there. We're building a refractory circuit for the high-grade refractory ore. So this basically Teranga bought Barrick because they had adjacent deposits and they were able to consolidate and unlock significant value. That's why IRRs are very high, over 72% at conservative gold prices. So the project is tracking along well. We've committed most of the capital to date and are on track for production in Q2 next year. This will increase Sabodala-Massawa's production profile to over 400,000 ounces per year while maintaining costs very low. Lafigué, that's a good case study for us. We've invested $20 million, found 3 million ounces. So this is an NPV today of about $500 million at $1,500 gold price. And we see more potential. For the time being, it's 200,000 ounces over 10 years at less than $900 per ounce, but only with 1 deposit, whereas there's 12 other targets that have been identified on the property. So you see a picture there. Again, we have good experience of building in West Africa. We built ET and Houndé in 2017, 2019, both on time, on budget. And Lafigué is no different. So for the time being, we continue to be on budget and on schedule for production in mid next year. We took markets by surprise last year. In fact, at this time last year, Tanda-Iguela was not even on the radar. We were just getting initial drill results. And this is, the benefit of being Endeavour Mining in West Africa. Given the drill results we saw, we're able to pull drill rigs. I mean, I heard before companies were having issues with drill rigs, etc. I mean, because we're the largest producer and largest explorer in the area, we're able to pull drill rigs and staff from other areas in West Africa and in Ivory Coast, all hands on deck on Tanda-Iguela. We ended up drilling 60,000 meters, and I did not even have time to publish drill results. By the time I said, guys, should we publish drill results? They said, no, wait 3 weeks and we'll have the resource. So we published in November 3 million ounces, 1 million indicated, nearly 2 million inferred at roughly 2 grams per ton. This is one deposit, Asafou in the south. We're currently working this year on a 70,000 meter program, so more than what we drilled last year. And we expect to both increase the resource base and increase the indicated resource status. As soon as we published the press release on this, the immediate phone calls we're having is, when is it in production? Well, it's still early. We're currently working on increasing the resource base, but this will form the base on which we'll build a PEA next year. If we work backwards, we want to finish the 2 projects that we're building now. So those will be done by mid next year. We then want a year to rebuild the balance sheet and up the shareholder returns program, because we don't want to always need to reinvest in the business. We want to be able to show shareholders that we're able to grow, increase returns, and then grow again. So this means that we'll be able to build the next project by 2025. So this gives us 2 years to continue to increase the resource base, do studies, and get permitting. It's quick, but it could be done. So this means that this can be in production at the earliest by end of 27 or beginning of 2028, which would mark less than 7 years from discovery to production. So finally, why invest? Well, we're a high conviction pick from most of our analysts and our top 20 shareholders, but that's probably not good reason enough. The reason we are a high conviction stock from them is, first off, we do what we say we're going to do. So we met guidance for the last 10 years. We said we were going to find 10 to 15 million ounces, and we did. We said we would build on time, on budget, and we did. We said we would return value to shareholders. Well, as soon as we finished our growth phase, we deleveraged ourselves in a year. We had a peak net debt of 660 million, and within 18 months reduced that to a net cash position, which was a triggering point for us to be able to initiate our dividend program. So in summary, I would leave you with 3 key stats. We produce gold at industry-leading cost, $950 per ounce. We discover roughly 3 million ounces per year at $25 per ounce. And last year, we've returned over $200 per ounce produced to shareholders. So why invest? Well, it's our ability to keep doing that for the foreseeable future. And to be able to do that, it's about finding ounces and putting into production our projects. With that, thank you.